Tom Florence, 361 Capital, runs a number of alternative mutual fund strategies, global macro, long, short, managed futures. Which ones are doing the best for you right now?
The best fund for us right now is our Managed Future Strategy Fund. It's a domestic fund and it's a counter-trend strategy versus a trend-following strategy. It's one of 4 5-star mutual funds rated by Morningstar, and it's the only counter-trend fund. It invests in equity futures, and it is contrarian in nature. So when people are buying, we're selling, and when others are selling, we're buying.
Can you talk a little bit about your global macro fund? A lot of action around the dollar so far this year.
So global macro has been a strategy that people are starting to get excited about, but it's something that over the last few years really hasn't performed that well. And that's really because we've been in this long-only, bull market. So a lot of the other investments inside a global macro fund have not performed as well. But as performance is starting to spread out amongst commodities and currencies, long, short, domestic as well as global macro starting to come back into play.
And how will an era of rising interest rates, how will a Fed rate hike affect what you do over at 361?
Well, we're looking at a rising interest rate environment and thinking that it's the time to have alternatives in your portfolio. Having this long-only market that we've had, it really hasn't been a benefit to alternative investments. But as we see rising interest rates, as we see PEs rising in the equity markets, as we see more instability in the global markets, it's perfect for alternatives. Why wouldn't you want to have something that diversifies your portfolio and provides a potential return stream that is different than what you've had in your portfolio in the past?
And why is bigger not necessarily better when it comes to alternative funds?
Well, it's an interesting question, Greg, because that's always been our business, right? Bigger is better. Well, in many of the strategies in alternatives, they're capacity constrained. And there's already examples in the marketplace where funds that have taken on a lot of capacity because they're very good marketing machines, the returns have decreased, and in the end, it's been not a good thing for the investors. So that's something at 361 we're very focused on, is capacity and making sure that we limit capacity within our funds.
And then finally, how much of an investor's portfolio should go into an alternative asset fund?
I think more than people are hearing about today. You're seeing these, percentage averages talking in the neighborhood of 15, 18%. To really make an impact within a portfolio, it needs to be north of 20. We look at it in terms of 20, 25, 30. In the institutional market, that's about where it is. And we think that's what advisors should be considering for their clients.
All right, thanks for coming on.
Thanks, Greg.